Hi students, welcome to the video on financial accounting at your fingertips. In this video, we are discussing partnership accounts, that is admission of a partner. In the previous video, we have discussed the reconstitution of a partnership firm. That means reconstitution arises when there is either admission of partner or retirement partner or death of a partner. In this problem, we will solve one problem covering calculation of new profit share ratio, then sacrificing ratio, revaluation of assets and liability, distribution of undistributed profit, preparation of capital account, then balance sheet at the opening date. So, according to the problem, G and S were partners in a manufacturing concern sharing profit losses equally, and on 31st March 2023, firms book revealed the following position. On live side, partners capital was given G 2 lakh, S 1 lakh 60, total 3 lakh 60,000. Sundry creditor 1 lakh 50,000, bills payable 40,000. So liability total comes to 5 lakh 50,000. On asset side, cash in hand 1,520, cash at bank 39,000, bills receivable 18,880, sundry creditor 2 lakh 10,000, stock 48,000, plant and machinery 70,000, furniture fitting 17,000, freehold premises 1 lakh 38,600. Total also comes to 5 lakh 50,000. So liability total, calculated asset total. On 1st April 2023, it was agreed to admit T into the partner's firm on the following terms. So new partner will arrive, that is T, on following term, that he should bring into the business sundry debtor amounting to 24,000. That means all of you know, when he is bringing any asset or cash to the business, it should be debited. Debit what comes in, or increase in assets should be debited, and if it is bringing liability also, it should be credited. The increase in liability should be credited. Sundry debtor amount to 24,000, less a provision of 10% bad debt. So bad debt provision means 2,400. When sundry debtor is debit 24,000 and credit is provision for bad and doubtful debt, that is 2,400. Sundry creditor amount to 5,000 is also credit. Sundry creditor increase in liability should be credited. Also goodwill of business valued at 15,000. Goodwill in asset, increase in asset should be debited. So goodwill account will be debited. Its capital in the new firm is to be 50,000. So he has to bring 50,000 into the business. It may be partly in assets, liability and cash. The balance of which he pays in cash. In consideration thereof, he receives 1/5 share of the profits of firm. He is receiving 1/5 share of the profits of the firm. When he is receiving 1/5 profits, that means T share of profit. T share of profit. That is 1/5. Then remaining profits 1 minus 1/5. That is 4/5. To be distributed equally between G and S. So G will get 4/5 into half. So that is 4/10. And S will get 1/5 into half. That is 1/10. Remaining profit 4/5, 4/5 half, 4/5 half means it is 4/10 for both. So the new profit sharing ratio of three partners, that is G, S and T is equal to 4/10 4 by 10 and 1 by 5 means 2 by 10. So it is 4 is to 4 is to 2 or 2 is to 2 is to 1. This is for profit sharing ratio. Then we will prepare one revaluation account. So prepare revaluation account. Under revaluation account, all of you know, if there is increase in assets, it should be debited, decrease in assets should be credited, increase in liability should be credited, decrease in liability should be debited. If there is one asset which has not been discovered or noticed, now it is taken, so asset account debited revaluation. If any liability which is not taken, noticed, now it will be taken, so increase liability should be credited. So we will prepare revaluation account of G, S and T as on, that is they are preparing on 1st April is admitted. So 1st April 2023. Particulars amount. This is left hand side debit side, right hand side credit side. One is particulars, then amount, then particulars amount. Here it is given it was mutual agreed that the following adjustments should be made as regards the business of G and S. Stock were to be reduced by 8,000. So decrease reduced by 3,000 means whatever the stock, it is now reduced by 8,000. So decrease in assets should be credited. So to stock, revaluation account debited to stock 8,000. Here you can write revaluation account or profit and loss adjustment account. This is stock. Then plant and machinery to be increased by 3,000. Increase in assets should be debited. So by plant and machinery account. Plant and machinery to revaluation. Or revaluation account credited by plant and machinery, it is 3,000. Then fixtures and fitting to be completely write off. Fixture fitting was 17,000, now it is totally zero. Write off to fixtures and fittings, that is write off. Full write off 100%. So it is 17,000. So this is 25,000. So loss is 22,000 by loss on revaluation transfer to capital accounts of, that is G and S. So it is 11,000 plus 11,000, it is 22,000. So this is done. Revaluation is done. Then after revaluation, we have to prepare capital accounts. Here first you see what is the journal entry. What is the journal entry that we have to verify first. Sundry debtor amount into he brought, new partner brought sundry debtors. So journal is sundry debtors account debited. The amount is 24,000. Provision for bad debt. 2. Provision for bad and doubtful debts. Amount is 2000, 10%, 2400. Sundry creditor amount 5000. 2 sundry creditors 5000. For asset it is debit balance. Whatever asset he brought, we will debit it. Whatever liability he brought, we will credit it. So sundry creditor 5000. Goodwill he brought. Goodwill is assets. So goodwill account, that is debited 15,000. Then his capital. His capital means this capital account should be 50,000. He has to bring or make his capital 50,000. So in order to make his capital 50,000, adjust liability 7,400. So totally 57,400. Asset is brought only 39,000. So 18,400. The balancing figure he will bring in terms of cash. Cash account debited, that is 18,400. That is balancing. This is balancing figure. This is the journal entry and it will be adjusted. Then we will prepare capital account. So loss 11,000, 11,000 you have to remember. So we will prepare the capital accounts of partners, 3 partners. This is the debit side and this is particulars. So this is capital account. So capital account, left hand side is debit side, right hand side is credit side. So this is particulars. Then all the 3 partners, GST, then particulars, then GST. So opening balance of capital was 2 lakh 1 lakh 60. So we'll write by balance brought down. So amount is 2 lakhs 1,60,000. 1,60,000. Then this capital account credited by net assets is equal to 50,000. Is getted 50,000. So cash brought in 18,400. Here loss is there to revaluation loss. So it is 11,000. Here it is given. It was further agreed that above adjustment is effected, S should introduce sufficient cash to make its capital equal to G. So S has invested, the balance of capital of S was 1,60,000 but G was 2 lakh. So S has to bring another 40,000 in terms of cash. So by cash 40,000. Now we'll balance the capital account. Here it is 2 lakhs. Here it is 2 lakhs, then 50,000. Here revaluation loss will be adjusted, so we'll write to balance carried down. This is the closing balance. 1 lakh 89,000 each. 1,89,000, 1,89,000, then 50,000. This is all about. This is 2 lakh, then 2,50,000. So this is our. Then we will prepare the balance sheet. Here balance sheet is given. We change here. This is balance sheet. Balance sheet of Messrs. GST as on, that is opening balance, 1st April 2023. So capital here we will write GST, 3 capital. So for G we will write GST. So G is having, that is 1,89,000, and AC is 1,89,000, and T is 50,000. So total comes to, here it is 0, 0, 0, then 6, 14, 22, then 4, 4,28,000. Then sundry creditor, he also brought, new partner brought sundry creditor to the extent of 5,000. It was 1,50,000, then 5,000 added. This is 1,55,000. 1,55,000. Then bills payable is 40,000. So total of opening assets, opening balance of liabilities, 6,23,000. Then cash in hand. Cash in hand, it was 1520. Then he brought 18,400 plus another S brought 40,000. So total cash comes to, that is 929, 59,920, 59,920. Cash at bank is 49,000, correct. Bills receivable is 18,880. Sundry debtor. For sundry debtor, balance was 2,10,000. New partner brought 24,000. So total is 4, then 3, 2. 2,34,000. And stock plant and machinery. Then provision will deduct, that is 10% of 24,000, that is 2,400. So it is now 600, then 132, 2,31,600, 2,31,600. The stock was 48,000, and that is reduction in the value of stock to the extent of 5,000, 8,000. So it is now 40,000. 48,000 minus 8,000, 40,000. Plant and machinery increased by 3,000. So plant and machinery increased by 3,000 means, that is 73. It was 70. Now it is 73,000. Then furniture and fittings is 0, nil. It is totally written off. Then freehold premises 1,35,600, correct. Then goodwill is 15,000. Goodwill is 15,000. So total will be 15,000. So total is 0, 0, 6,23,000. So balance sheet, opening balance sheet of GST, 3 partners or Messrs GST as on 1st April 2023. Liability total is 6,23,000. Asset total is 6,23,000. So balance sheet tally. Thank you for watching this video. Don't forget to like and share the video. to all of your friends so that everybody will benefit it. Subscribe if not already subscribed.